It's a great time, students of financial reporting, we meet again for this session. So we would like to look at a question of a published financial statement, that is according to International Accounting Standards 1, on how you are supposed to do the statement of profit and loss and the statement of financial position. So this is a question of November 2017. So let's look at it, then we present what is required by the examiner. So 2017. So November 2017, question 4. So they were saying that the foreign trial balance was extracted from the books of Savannah Limited as at 30th September 2017. So you will be given a trial balance whereby you can see we have rand, building, plant and machinery, accumulated depreciation, revenue, cost of sales, inventory, distribution cost, administrative expense, income tax, investment, property at fair value, finance costs. We have the aspect of 8% redeemable preference shares, 10% debentures, intangible assets, trade receivables and trade payables, ordinary shares, share premium, retained profit, a deferred tax, bank and cash balances, investment at fair value, additional information. So additional information is the one which needs a lot of attention because we have to do that aspect of interpretation. So the fair value of the investment property on 30th September 2017 was 2790. So that is in terms of thousands, so 20,790. So you're checking the investment property from the trial balance is stated at what? Investment property, 20,000. So 20,000, then by the end of the day, it was stated at so 2790. On the other side, it was 2340. So meaning that there's an increase. There's an increase on that investment property. So the increase is an income or an expense. The increase in the investment property. The increase, so that is an income. Then we talk about note 2. Information relating to intangible assets was as follows. You are told there's an intangible assets, which include what? Development cost on software, amortized over 5 years, patents and research costs. Then you are told that the patent was acquired on November 2014. It was determined that the patent had an indefinite useful life when it was acquired. However, on 1st October 2016, due to a new competitor gaining ground on the company's technology, the patent estimated fair value was established to be 13,500 with an estimated useful life of 3 years. The research costs were incurred during the year in developing new software, which was not successive. This research cost of 828. So that is a cost. That is an expense. Number 3, you are told that the following details are relevant to property, plant, and equipment. Buildings are depreciated at 2.5% per annum on straight-line basis. Plant and machinery are depreciated on a straight-line basis over 10 years. Depreciation for the current year has been provided. Has been done what? Provided. On 30th September 2017, the rand and the buildings were valued to 25,500 and 45,600 respectively. The new values are to be included in the accounts for the financial year ended 30th September 2017. Number 4, Savannah is also a sales agent. That is a sales agent for Majani and is entitled to sales commission of 10% on sales made on behalf of Majani Limited. The net proceeds obtained from the sales after deducting the commission are retained to Majani Limited. So this amount was so they said that the net proceeds obtained from the sales after deducting the commission are remitted to Majani. So during the financial year ended 30th September 2017, Savannah sold goods worth 2,700 on behalf of Majani Limited. This amount was included in the sales revenue disclosed in the above trial balance. So he was acting as an agent, of which, since he was acting as an agent, he was getting what? He was getting commission. So the sales he made in that period, of which, based on the sales he was making on behalf of that other company, he was entitled to a commission of 10%. So we will account for the commission, the sales for the Majani. So in terms of what he was remitting after selling, so we'll account for that. We'll account for that commission and a check on how we are supposed to record in the books. So number 5, inventory as at 30th September 2017 included partially damaged and slow-moving goods. The cost of these goods was 450, and they were eventually sold in October 2017 for 128,400. How do we account for inventory? Using which standard? Which standard? Which standard do we use to account for inventory?
We use IS2.
Yes, which says that
The lower of cost and net realizable value.
that is correct. So the inventory is measured at the lower of cost and the net realizable value. So you have to check the cost when you are given the cost, and when you are given what? When you are given the cost and when you are given the net realizable value, so you compare the two, you take the lower. That is according to IS2. They can test about inventory under the theory part. They ask you about the measurement, the scope of the term inventory. There's a time they tested about IS2, around 15 marks as theory, the first part of that sitting. Let's say question 1 of the relevant sitting. So you need to understand on how you are supposed to account and measure inventories. So number 6, finance cost comprised interest on debentures, interim dividends paid on ordinary shares, dividends paid on redeemable preference shares, investment income from tax-exempt companies. So the finance cost contains these items. And you are told tax is 30%. Number 8, the balance on the income tax in the trial balance represents the amount paid for the year. The tax expense for the year is estimated to be 7,770,000, inclusive of an increase in deferred tax liability. So you will have to compute the aspect of the current tax based on the information number 8. So they need 3 statements: income statement, statement of changes in equity, and a statement of financial position. So you can only do the 3 once you have done what? Your interpretation well. So once you have done your interpretation well for the additional information, you can be able to do. So let's start by interpreting this additional information from additional information number 1 to the rest. Then we do classification of our expenses according to the what? Interpretation of our expenses. Interpretation of our expenses according to the functional heads, the functional basis of presenting your expenses. The one which I have already said, or I can say that you have to classify your expenses according to the administrative, selling and distribution, finance cost, and cost of sales. So let's start from number 1, about investment property. So investment property. So when we talk about investment property, here there was an increase. If you compare what you have from the start of the year. Remember that our financial year starts on 1st October 2016. So the investment property was stated at 20,340. But at the end of the year, we are told it's stated at 27,990. So that is an increase. That is an increase. And what you need to understand that investment property, that is according to International Accounting Standards 40, represents what? It represents, so you need to talk about land and building that are held by an entity for rental purpose or for capital appreciation. IS 40, investment property, land and building, which are done what? Held by an entity for rental purpose or for capital appreciation. So when you are doing measurements of investment property, you can use the cost model or a fair value model. You can be asked about that. How do you measure investment property? So investment property are either measured using the cost model or the investment or the fair value model, sorry. So when we talk about the cost model, we say that the investment property is measured at cost, less accumulated depreciation. When we talk about the fair value model, investment property is measured at fair value. Now this one, this is fair value model. They were measured at what? At fair value. So working number 1, the investment property. Investment property. So investment property, so as at, so you were told that as at 30th September 2017, it was stated at what? 2970, according to additional information. As at the start of the year, as at 1st October 2016, it was stated at 2340. So the difference is, so there's a fair value gain. Fair value gain to income statement. Fair value gain to income statement. What's the difference there? Use your calculators now. It's that time to use your calculators for the difference.
450.
That is 450. Then in additional information number 2, the second additional information, you were told about the aspect of intangible assets. We talked about the aspect of intangible assets, whereby they said that intangible assets comprise the what? development cost amortized over 5 years. Amortized over 5 years. So development cost. So let's look for amortization. Amortization of development cost of what according to the question? Development cost on software. So remember that in that additional information number 1, they say that the development cost on software. No, it's 450. It's 450. If you take 20, 970 minus 2340.
It's 2790.
Oh, so I've written 9. That a mistake here. It's 20.
790.
790. 27. So this one is why we did a mistake. So it was 29, 790 minus 23. Okay. Then we have amortization of software. So it's amortized over 5 years. So the software is stated at what? 25,800. So 25,800 divided by 5. What did you have? The faster you give me the answers, the faster we finish this question.
5160.
That is?
5160.
5160. Then in the same additional information number 2, they talked about patents. They talked about patents. So the patent was stated at 15,600. Then there's research cost. But in that additional information, there's a second dot where they say that the patent was acquired on 1st November 2014. It was determined that the patent had an indefinite useful life when it was acquired. So it's not specified it will exist for how long. We don't have the remaining useful life. That is why they say that it has an indefinite useful life. On 1st October, when our financial year is starting, due to a new competitor gaining ground on the company's technology, the patent's estimated fair value was established at 13,500. But at the end, it was stated at what? According to that additional information number 2. Remember, it was stated at 15,600. So meaning that there's a difference of. So in short, there's a difference of. So there's an impairment. It has lost. It lost the value. It's an impairment of. So it was stated at 15,600. They are giving us a fair value after measuring. In that same year, its fair value was. That aspect of
13,500.
And we have a difference of
2100.
that is 2100. 2100. Then they say with an estimated useful life of how many years? So after measurement to its fair value of 13,500, now they have said that it was having a useful life of 5 years. So amortization.
3 years.
5 years. So amortization of patent. So the 13,500 divided by 5 years. So if you divide
It's 3 years.
Not 5. Oh, it's 3 years. My question is not that clear. That is why you are seeing I'm picking all figures. So 13,500 divided by 3.
4500.
and 4,500. Then for research cost, they mentioned about the research cost. Research cost, they said that the research costs were incurred during the year in developing new software, which was not successful. The value of the research cost is 82. 80. This is an expense. That is an expense. Note 4. Note 3. This depreciation of building at 2.5. Plant and machinery are depreciated on a straight line basis over 10 years. But they said that what? Depreciation for the current year has been done what? Has been done what? Has been provided for. Has been provided for. So anyway, before I go to that note 3, because it's not of any importance, because the depreciation for the year has been provided for. So why was I doing these intangible assets? So let's embark on these intangible assets even before we continue. Let's finish by doing the valuation of these intangible assets. Valuation of intangible assets. The valuation of the intangible assets. So there was this development cost, because they said that that intangible assets is made up of development cost. So development cost, its cost was 25. Was its cost? Yes, its cost is 25,800. So 25,800. You have an accumulated depreciation. According to that note too, you can see we have an accumulated depreciation of. Anyway, I need to know by the end of the period which development cost I have to record. That is why I'm doing the valuation. So development cost, it was having an accumulated amortization, accumulated amortization of 15 or 8 years. So we deduct accumulated depreciation. Then the depreciation for the year is this one, 1560. So, meaning that the value of the development cost, which will remain by that period, was?
It's 5160.
5160, yeah?
Now the depreciation for the year is 5160.
5160. So that here we have
8760.
Sorry?
8760.
25,800 minus 15,480 minus 5160. You are getting the figure you are saying?
5160.
Supposed to remain 5160. For patents, after reducing to 2100 minus 45 is the same as saying, or I can say, or you could have taken the 15,600 minus what? Minus the 21, because it was impaired from 15,600 to 13,500. Then you minus 45. What do you have?
9,000.
9,000. So my intangible, the total value of the intangible will be, goes for the research cost. For the research cost, it's an expense. It will go to the expenses.
14,160.
14,
160.
160. So I have considered this as an impairment because it reduced in value. So I cannot say that it was amortized. The better name, I could have used this impairment, but at the same time, these are working. So even if you could have said amortization and understand what you were supposed to do, it's okay. But the better name, I use this impairment because in terms of evaluation, that relevant patents reduced in value. So there's that the difference of the figures of 15,600 and 13,500 once they did the evaluation of that patent. So 14,160, that one is okay. The one I've recorded there. Then additional information number 3, I will only focus on the dot number 4. Dot number 4, then maybe the others will assist me. The depreciation will assist me.
Excuse me, Mwalimu. Maybe you can explain. I was just looking through, checking through this amortization of patents where you took 13,500 divided by 3 years. But we have two values. There was 15,600, but you decided to take 13,500 divided by 3 years.
Yes, because
why not 15,600?
Because they said in that sentence in note 1, however, on 1st October 26, due to a new competitor gaining ground on the company's technology, the patent estimated the current fair value after valuation. The current fair value after valuation in that relevant year. Remember that fair value is the value at which the relevant patent is stated in the market. So after doing the measurement of that aspect of the patent, its fair value was established to be 13,500. That is what they have said, with an estimated useful life of 3 years. So there's no way I could have gone ahead again to go back and use 15. So after valuation, they are saying that this asset in that relevant year is stated at 13,500. That is why I said that in that relevant year, there's a reduction in value of that relevant patents from 15 to 13. Then after 13, it was having a remaining useful life of 3 years. That is why I went ahead to use the 3 years to get the amortization.
Okay.
So in additional information number 3, dot number 4, they said on 30th September 2017, they did what? They did on 30th September 2017, the land and buildings were revalued to 25,500 and 45,600. So the new values are to be included in the accounts for the financial year ended 30th September 2017. So we do what? We determine revaluation gain or loss. There is another working 3. So revaluation. So we determine a revaluation on land and buildings. On land and buildings. On land and buildings. So the revaluation on land and buildings. So we have land and we have buildings. We have land and buildings. So we always start with the revalued amount. So the revalued amount was, so that is according to additional information. So for land, they said that it was 25,500 and the other one is 45,600. That is for building. So 25,500 and we have 45,600. So then we compare with what? Net book value. So the net book value, remember that for rand can never be depreciated, but for building it has to depreciate. That's why you are told the aspect of some depreciation there. So rand, according to the trial balance, rand was stated at 20,100. According to the trial balance. What about building? Building was stated at 42,600. So 42,600 minus accumulated
6390.
6390. So remember that for the depreciation for the year, they said it has already been done what? Provided for. So we don't have to deduct again. So 42,600 minus 6390. 36,210. So the difference. The difference is, so this is 93, 90. And the first one is 25,500 minus 2,100.
54,000.
Sorry?
400.
5,400. Eh? You know, all of these are gains. Eh? Like now, this one was revalued to 25. This one was revalued to 45. So these are gain, revaluation gain. If you add the two, the total,
14,790.
total revaluation gain,
14,790.
14,790. Correct. So we are done with that additional information. We move to the next one. I expect you have been taking notes, so I will be expecting these answers. You give me answers from this. Eh? So the next,
It's 14,790, not 14,970.
what's happening today? So that is 14,790.
Yes.
All right. Oh. Then the next additional information is additional information number 4, eh? Where Savannah was acting as a sales agent. He was entitled to a commission of 10%. 10% commission. Eh? 10% commission on what? On sales made on behalf of Majani. So the net proceeds obtained from the sale of after deducting the commission are remitted to Majani. During the financial year that 30 September 2017, Savannah sold goods worth. So the sales for this year is sales 2,700. He made sales of 2,700 on behalf of that company. So this amount was included in the sales revenue. So this amount already has been included. Included where? Included in sales revenue. Sales revenue in trial balance. In the trial balance. So Savannah had not remitted net sales proceeds to Majani. So he had not remitted after deducting his commission. Eh? So he was supposed to deduct a commission of so 10% of this is 2,700. Yeah? So 2,700.
Yes.
2,700 times 10%. So 27. So what am I supposed to do to sales? He has to remit. He has to remit. So we debit sales. What I'm supposed to do to sales, I debit sales 2,700. Remember that this amount was already included there. Then we credit what? Commission income of 2070. Then for this company called Savannah, because they had not remitted this amount, there's a liability. Yes, the difference. The liability, he was supposed to remit to the principal, Majani. So that is 2,700 minus the commission he was supposed to deduct. So the difference is
18,630.
18.
630.
The next additional information is note 5, inventory. Inventory, which is always measured at what? This is what's working number 4. Working number 5 is all about inventory. So valuation of inventory. Valuation of inventory as per International Accounting Standards 2. As per the International Accounting Standards 2. So which is all about, you talk about law of cost and net realizable value. The lower of cost and net realizable value. So remember that in the additional information number 5, they said inventory as at 30th September 2016 included partially damaged and slow moving goods. The cost of these goods was 450, and they were eventually sold in October 2017 for 128. So the inventory was including partially damaged and slow moving goods. So the cost of these goods was 450. The cost of these goods was 450 to the 450. And they were eventually sold for 128, 400. So here there is a write down, because they sold, write down of inventory. Write down of inventory. So meaning that their cost was 450. They were sold at what? 128. That is 128.4. So what do you have there?
321,600.
321.
600.
0.6. I'm writing in thousands. So there's a write down of inventory. Because you are told the cost was 450, and they were eventually sold for 128.4. So what do I do with the write down of inventory? So this one will affect the cost of sales, and at the same time we record where? We record under the inventory. So because this is just a loss on disposal. A loss on disposal, what we do? We debit cost of sales. Our inventory, we credit inventory. Because our inventory, they made a loss. They made a loss. So what is remaining? What is remaining? Finance cost, note 6. They say it contains those items. You have tax, note 7. The note 8 is all about, again, we compute the current tax. Let's do the other workings which are remaining. Finance cost. So we need to know our finance cost. We need to know finance cost. We need to know our finance cost working 6. So we need to know our finance. So finance cost, they say it includes interest on debentures, interim dividends paid on redeemable preference shares, investment income from tax exempt companies. But now, if you embark on your trial balance, I can see we have 2 items. 8% redeemable preference shares, and if you are unmuted, make sure you are muted. If you are unmuted, so in that relevant additional information, not additional information, in the trial balance, we have 8% redeemable. So this one will be based on those 2 items, 8% redeemable preference shares from the trial balance. We have 8% redeemable preference shares of 15. So the contractual rate, so 8% of 15,000 is 8% of 15 is, we have 10% debenture. So 10% of the value of the debenture, 30,000. So this is 3,000. 8% of 15 is so 0.08 times 15.
1,200.
And I think you can see that in the you can see that 1,203 in additional information number 6. The others is just investment income in note 6. The others items is dividends and investment income, but you can see those interests in additional information number 6. So that is what makes us to have a finance cost of 42. Then finally, we have the last additional information to interpret. That is additional information number 8. Number 8. The additional information number 8. So working 7, because working additional information number 7 is just tax. They say that it's at 30%. So number 8, they say that the balance on the income tax, the balance on the income tax in the trial balance. So the income tax in the trial balance was at what value? 85.80. Represents amount paid for the year. The tax expense for the year is estimated to be 7,770,000, inclusive of an increase in deferred tax liability of 1020. 7,770,000 is inclusive of an increase in deferred tax liability of 1020. So what we do here, so the income tax, so income tax. Don't want to do a lot of information. I don't want to write a lot of information. So income tax expenses. You know, according to International Accounting Standards 12, we always consider the current tax and what? Deferred. Current tax and deferred tax. So we need to know the current tax expense. We need to understand about deferred tax expense. So need to know the two so that we have the income tax. Income tax expense. So you were told already that the income tax, the tax expense for the year the tax expense for the year, which is the income tax, is 7,770,000. 7,770,000. Inclusive of an increase. So inclusive of an increase of this deferred tax of 10, 20. So meaning that the current tax is, so 770 minus 10, 20 is
67.
6750, yeah, 67. So when I will be talking about my deferred tax aspect of that, not before when I go to the deferred tax, if I check in my if I check in my trial balance, they say that remember that our current tax was the income tax. In the trial balance, the income tax was 85,
8580.
8580. 8580. That is the relevant income tax. And here we can see we have a current tax of 67,
6750.
meaning that they made a prepayment of, so these are prepaid tax. So to pay a prepaid current tax of the difference, give me the answer, guys. The difference
1830.
19.
1830.
So the only thing which will be remaining here is gonna one. The classification of expenses. But before I go to the classification of expenses, I can decide to say that remember that deferred tax is a long-term liability, of which we need to know the balance to be recorded. We need to know the balance of the deferred tax to be recorded in the statement of financial position. So I can decide to open a deferred tax account. So the balance brought down is from the trial balance.
8490.
8490. 84. Then after the aspect of this 8490, remember that there is revaluation. On some scenarios, revaluation must affect deferred tax. So there was revaluation of, our revaluation was when we did revaluation for land and building, because already we have been given a corporation tax rate of 30% in that question. So increase this account by the deferred tax on revaluation. Deferred tax on revaluation. So the deferred tax, so the revaluation was 30% of that revaluation. Our revaluation was
14970.
14790.
14,790. So 30% of this
4437.
4437. So then there was this one from P&L, the increase 1020. But there was this. So meaning that the balance carried down of our deferred tax will go. So 8490 plus answer plus 10, 20. So this is 13,947. This is what I will be recording, the statement of financial position for the deferred tax. For the current tax, it's our current liability. We have already done that. And we have even prepared the payments for the relevant tax. Right. So now before I do the statements very fast, let's do the statement of expense allocation. Statement of expenses allocation. Statement of expense allocation.
Auntie.
So we talk about cost of sales. Avoid background noise. Yeah, some of you have your. So as per trial balance, cost of sales. Do we have the cost of sales as per the trial balance? Yes, we have 65, 670, 670. Admin from the trial balance, 11,340. What about distribution? 690. Let's start from the additional information again. So tell me some of the expenses which we have been doing from our working. Like now, note 2, there was amortization because note 1 is all about gain. The investment was a gain. Note 2, there was development cost which was amortized over 5 years. The amortization was so amortization, according to this, it was amortization of intangible assets. So where can I classify this? So you can either classify like, and so this one I will, because it was startup software, it was a development cost on software. So I would say that the software was being used in running of the business operations. The software was used in the running of, obviously it would be used in the company's running operations. The software, it is amortized, meaning that I can take it to admin. So it was which figure? 25,800 by 5. 5160. Yeah? Then again, there was 2 items I considered other purchase. The impairment after it reduced its value, 15,600 minus 13,500. Again, patent.
21.
Again, patent it's an intellectual property. That one you put an admin. Those are business rights. Then there was amortization. 13,500 over the 5 years, over the 3 years. 13,500 divided by 3 years. Tulipata ngapi? It was 13,500 divided by 3 years.
4,500.
4,500. Then after that, there was research cost. The research cost was 8280. Is there another expense remaining here? I talked about note 3, the depreciations have already been provided for. I don't have to record them again. Note 4, the commission was an income. Note 5, there was that inventory, the written down value from 450 to 128.4. So that is loss on disposal. When they need a set of inventory, they made a loss. Loss on disposal was of the stock. The difference. 450 minus 128.4. We go to which figure?
21.6.
128. That is what it was what?
321.6.
321. That's all. That's all. Give me the totals. Do the subtraction. So this is 690. What about the others? 65, 670 plus 321.6. So this is 65, 991.6. What about admin? 11,340 plus 51. 31.
380.
380. Now, if you are capable of doing it, the other statement is just a walkover. Because like now here, I will say Savannah limited. Statement of they were calling it what? According to this requirement, they were in need of comprehensive income. Statement of comprehensive income. But nowadays, they call it statement of profit and loss. Profit and loss. And other comprehensive income. Another comprehensive incomes. So that is for the year. For the year ended, that is September 2017. It's an aspect now of doing a copy paste. So our sales revenue, turnover, you can talk about revenue, sales, or they can call it turnover. It's what? Revenue is 180, 030. Minus, remember that this is the revenue of Savannah. But Savannah was an agent of a Majani. So those sales he made, they were included here. That is why I say the debit sales, we deduct them so that we remit the balance after deducting your commission. Is that entries I talked about? So the sales which he made on behalf of Majani, they were included here. It's a 180, not just 18. I think it was. The sales was
700.
this one.
27.
This one is 18 or 180, 18030. And the sales he made on behalf of Majani was 2,700. They were included here, so we deduct. Give me the answer. Then cost of sales. For the cost of sales, we have done our working. This one. We have 65, 991.6. So we deduct that so that we have a gross profit. Our revenue after deducting the 2,700. So that we go to other incomes. To add other incomes. So the incomes we have is the first one is commission. The first one is commission. Commission was on 10% of the 10% of the sale. 10% of 2,700. So 27. Another income.
Investment on property.
Investment, the gain.
Yeah, 630.
The fair value gain. The fair value gain on investment property. That was a working number one. So it was 450. Then there's note 6, there's investment income from a tax exempt companies. There's an investment income, 1620, note 6. Check note 6, huh? Right. For the expenses, we have admin. Admin is 31, 80. Distribution is 6690. So you get profit before interest and tax. Profit before interest and the tax. So interest, your finance cost. Remember, it was based on the debenture and the redeemable. So 8% and 10% of the redeemable preference shares and debentures respectively. We go to which figure?
4,200.
4,200. So profit before tax. So the profit before tax, so we'll get that one. Then tax. The income tax is 770. So that profit for the year will be so profit for the year, then add other comprehensive incomes. Other comprehensive incomes, revaluation. The revaluation gain was
14,790.
14,790. But remember that we said 30% of this increases the deferred tax value because already we were provided a corporation tax in the additional information of 30%. There's that value which increased our deferred tax based on the corporation tax given. So deduct the deferred tax due to revaluation. It was 30% of this is
4437.
4437. Total comprehensive income. Total comprehensive income. So you have the values for revenue. 180,030 minus 2,700.
159,330.
159,330 minus 65. 991.6. This is 93. 338.4. So plus 2070 plus 450 plus 1620 minus 31 380 minus 6690. So this one is 59. 59 for 8.4. Is that correct? Minus 4200. So this is 55. 55 what? 55 to 8.4 minus 77, 70. We have 47, 438.4, and 14, 790 minus 14, 790 minus 437. This is
437. 437. Evaluation again.
44, yes, 44, 44, 44.
37.
This is 44, 37. 44, 37. This is 10, 353. Because it was 30% of this, 44, 37. 30% of 14, 79. This is affecting the factors. That is why I'm deducting here. So plus 47, 438.4. So this is 57, 791.4. Anyway, without struggle, at least you could have scored this. Because only this one you understand, you have to deduct this, because it was supposed to be limited. Let's say even these ones, because you know these are direct. Which another item is direct? This one is direct. 1, 2, 3, 4, 5. So the one which are direct, there are at least 5. But the income statement was having 8. But there is 5 which are direct. Never miss them. Even if the additional information is tough. Even if the additional information is tough, when doing the statement of profit and loss, you can decide to draw this format. Even if time is not on your side or the additional information imekuwa ngumu. Chora hii format. Items zenye ziko direct you can at least fix. Usiache question hivyo. There's some items you can fix direct. The way I've mentioned that now there's around 5 which are direct. And the obvious mark 1 for 1. And in some scenarios they can even decide to mark 1 entry for 1. So the next statement was required by the examiner, statement of changes in input. So Savannah, it's a statement of changes in input. So for the year, our financial year was ending on 30th September 2017. So here we consider the movement of equity components. So which equity items do we have? The question.
Ordinary shares.
Take the trial balance. The trial balance, I can see ordinary share capital. Is there share premium? Yes. After share premium, retained profit. There. After retained profit, there was evaluation result. The additional information for the run and building. After the evaluation result, is there anything else? We talk about the total. So we start with the balances as per the trial balance. Balances as per trial balance. So ordinary share capital, 90. Share premium 6. This is 7620. This one is not there in the mini. This one is not there in the trial balance, but it's in the additional information. Give me the total. Then remember that we always check if there's issue of shares, but there was no issue of shares. There's bonus issues, there's no bonus. You know that format. There's a student who was asking about that format of statement of changes in equity. You have the notes, there's notes for that. So there's notes I shared, which shows the entire format for this. So here, the only thing I have is all about this profit for the year. Profit for the year from the income statement. This one, 47. So this one goes to the retained earnings, so retained profit. So 47. 3 what? That is 47, not the 3. 47, 438.4. Higher. So this one is 47, 438. This profit. That one you take to the total, 47, 438. Then evaluation. So the evaluation gain goes to the evaluation reserve. The 10, 353. There was a dividends paid. Dividends paid must reduce the profit. So the dividends which were paid. Dividends paid. So if you take note 6, there's an interim dividends paid. There's an interim dividends paid in note 6. 44, 40. So give me the totals. This is the statement of changes in equity for now, according to the items we have. This is 103, 20, plus 47, 438.4, plus 10, 353. This one was 161. So there's one thing I have not deducted here, 44.40. Meaning that if I minus 44.40, this is 156, 971.4. This is 90, 6,000, 10,353. Retained profit 7620 plus 47, 438.4 minus 44.40. What are you getting? This one, unapata ngapi?
5618.4.
56.
No, 50. 50,618.4.
600.4.
18.
Everything is recorded correct.
Yes.
Aye. Let's do the last statement. So for us to do the statement of financial position, we have to do the what?
E.
The property, plant and equipment. The property, plant and equipment. So land and building. Land and buildings, they were revalued towards, according to additional information. According to additional information number 3, 25,500 plus what? 45,600. If you add the two, remember depreciation was already provided, so I don't have to cater for it again. That is what they said in that additional information number 3. Just add the two, give me the answer. Then there was plant and machinery. That was the aspect of plant and machinery. So for the plant and machinery, it was 216, 600 minus accumulated depreciation, 127, 710. So when you answers, base 25,500 plus 45,600. This one is 71, 100.
100.
The other one, 216, 600 minus 127, 710. This is 88, 890. 71, 100. It's 159, 990. Let's do that statement now. Then we will see that we are done. Say that we are done with the question. So we say Savannah Limited. Statement of financial position. As at what? As at 30th September 2017. So we'll be talking about the aspect of PPE. It's not the aspect of recording very fast. So let's talk about PPE. So non-current assets. So non-current assets, we have. So for the non-current assets, we have the PPE, which is based on working. 159.
990.
Then we did intangible. Before intangible, we'll talk about investment. Property. You have intangible. So investment property was additional information about 20,790. Remember that it was restated to 20,790 because the fair value of the investment property by the end of the year was 20,790. Then additional information number 2, intangible. There's somewhere after doing the analysis of note 2, I said valuation of intangible. We got a total. This one is 27. An intangible based on the working. There's somewhere I did valuation of intangible. The total was after considering
160.
14,160.
160.
160. Then is there another asset record here? That is what I'm trying to check from the trial balance. Is there another asset? Yes, this investment at fair value. The last item, the last item in the trial balance. Investment at fair value 26,940. Current assets. So for the current assets, inventory, our closing inventory according to the trial balance was
2340.
64, 64.50 inventory. Then there was that stock which was sold. Remember that it was stated at 450. Then it was written down. It was written down by 126. It was disposed at a loss of. So the loss affected it affected cost of sales. So we need to reduce here. It was
321.6.
321.6. Trade receivables. The debtors balances, it's 700. That was prepaid. Prepaid tax. We took 82 what? Was 82 according to the trial balance. Our income tax was 82 or 85. It was 85.80 minus 77.70. So they prepaid a tax of
1830.
this one was 67 something. The current tax was 67. Prepayment was, you remember how we did this, so I don't have to. The prepayment was within that, yeah.
1830.
Yeah. The bank had what? According to the trial balance, there is something I had forgotten. Bank and cash.
Balances.
Bank and cash.
1360.
13. Up to this point, we have total assets. Talk about equity and liabilities. So for the equity and liabilities, we copy from here. These balances. The balance carried down. Ordinary share capital 90. Share premium 6. Evaluation reserve, retained profit first 56, 18.4. Evaluation reserve 10, 353. Non-current liabilities. For the non-current liabilities, there was an aspect of the 10% debentures. 10% debentures from the trial balance is 30,000. We have a redeemable. Prevalence, shares. Well, if it was irredeemable, it could be appearing under this one, under the statement of changes. Now it's redeemable. Redeemable is higher. So redeemable was 15,000. And we have deferred tax. We did our working, we did the T accounts. So from the working, we say the figures.
$13,947.
current liabilities, trade payables, $53, $40. So amount payable to who? Amount payable to Majani. So was what? After taking 2,700 minus the commission he was retaining, he was supposed to remit 2,700 minus 27.
18,630.
18,630. My total equity and liability. I check if the question is balancing. Oh, we have been doing stories here. Have we been doing stories? Oh, our question is okay.
Mwalimu, how about current tax?
I considered prepayment or what? Is how they mentioned that. So they said, let me check in that question. As you continue giving these figures, like now this one I have. So in that current tax was already in the trial balance. Income tax of 8550. We considered 7770 as our current tax, whereby the prepayment, so you see, is 85. You see the income tax of 8580 is 7770 is inclusive here. So this one already has been catered. The only amount I could have considered out of this is what they prepaid. Once it's in the trial balance, that one already has been catered. Don't have to.
So we are not going to have it in current liability.
No, we don't have to do that. It's in the trial balance. So the only thing I considered is the prepaid. Remember that we always pick the current tax from the additional information. If you have realized that from most of the questions, once it's in the trial balance, it has been catered. So is our question balance here? Total assets, whoever was adding. What is the value of the total assets?
239,888.4.
239.
239, 888.4.
What about this?
Balancing. The same figure.
I saw 239, 888. That is how you are supposed to do this question. But on your case, never struggle to follow. But you might miss one or two figures. And by the end, you can type balance. So make sure that at least you most of the correct entries. Like now here, there's many direct entries you can score. This is direct. This is direct. This is direct. This is direct. This one is direct. And even this one you were supposed to score. 1, 2, 3, 4, 5, 6. So the first one was 5 plus 6. Let's say in the statement of changes in equity, it was having how many marks? It was having 4. Let's say you can't miss 3. Because even if you write the balances as for the trial balance only, 9 plus 5, that is 14 out of 3. That is when you use the direct entries without even working, without most of the working. You are capable to score 14. Without all of the workings are done, you can score at least 70% of that question. Anyway, I have done the way it was supposed to be done generally, and that is what you were supposed to do. But always try your best to do more correct entries as possible. Yeah, so that is the end of the session today. That is the end of the session today. Let's meet next time.